And on our future as traders and investors. If you are an investor, whether you're a day trader or a long-term investor, I want to talk about both. Um, Over here on the left side of my chart, the first thing that I want you guys to look at is the VIX, which is going to be our volatility index. It's basically showing us how much fear is in the market. So the higher the VIX goes, the lower the market's going to drop, and vice versa. If we look all the way over here, I have it on the daily time frame, but we can look way back. This spike up here, this was from COVID, right? This was our spike from COVID that ended up hitting, let's see, about 85 on the VIX, which is absolutely insane. If we go further, I mean, I'm just going to pull up the weekly here. If we go further, we see the other spike on the VIX, which is all the way over here, and this is actually going to be our 2008 financial crisis when everything crashed back in 2008, right? And that hit 96.4. So very high, absolutely insane spike. If we look currently, right now the market is at, or the VIX is at 45, right? So it's not the end of the world just yet, right? We've seen it worse. We even saw it worse actually back last year in August when we hit about 65. And COVID, obviously, like I said, 85, 96. So we are still okay right now, but there is a lot of fear in this market about going into recession, going into a stock market crash. And I'm not counting that out, right? But we can't act as typical retail investors and start panic selling and fearing everything, right? And anything I'm going to say right now, it's not going to be, this is all for educational purposes, right? This is not real financial advice. I'm going to be mainly focusing on our day trading, right? But I'm just going to tell you kind of what I do. And yes, this is being recorded. I will have this posted after for you guys. So this is obviously educational. This is not real financial advice. I'm just going to tell you my mindset going into a time like this where a lot of us are going to be new to something like this, right? This is not something that a ton of people have seen before unless you were trading during COVID, unless you were trading during the 2008 financial crisis. Obviously, then you would understand. But I mean, I was 8 years old during the 2008 stock market crash recession. Obviously, I was around during COVID, and that's kind of when I was jumping into all of this stuff, was during COVID and during that crash, right? So I got to witness it a little bit and got to, at least in terms of my own investing, not as much in day trading, but that's kind of when I started jumping into day trading and kind of seeing what it was all about. So I've seen a little bit of it, right? And this is besides that, for my time day trading for a living, this is the most I've ever seen the market drop, basically in this quick of a time period, right? Which is going to cause a ton of people to freak out. I mean, if we just look, I have NQ1 pulled up, by the way, just our normal NQ chart. I'm not going to be pulling up NQM because we no longer have any data on NQM charts over here to the left. We have to pull up our normal NQ chart to see any data from the previous months and years. But just look at this. This is a yearly candle right now. Remember how we gained about 25% on NQ in the NASDAQ and the S&P last year? We've taken that all out. It's gone, right? All of our gains basically from last year are completely gone at this point. I mean, just from our open just now, I don't know how many ticks we just opened. Let me see. Let's see what our new day opening gap was just now. We just gapped down 400 points. We gapped down 400 points, and from that gap down to where we traded down to, almost 1,000 points, guys, literally in the first 30 minutes. The first 30 minutes of the market being open, we have lost 1,000 points, which is just unheard of. We don't see this happen, guys. This is absolutely insane. So I'm not saying all this to make you scared and to kind of freak out. I'm saying all this so that we have a better and broader understanding of what is going on in this market. How we can still benefit by trading this market, right? Because as an investor, a long-term investor, it's scary. And for myself, I don't even look at my portfolio right now because, again, all I'm going to see is super red and terrible numbers that I don't even want to look at. But the opportunity that this allows for someone like me is that this market, these prices are only going to be here for so long. The market will always go back up, right? That's just something that we all know if we look at it over the long period of time. We know even after our really bad market crashes, our really bad dumps, the market still ends up going up, right? So I'm not ever concerned that this market's going to go to zero, right? So that means for my long-term holdings, I'm okay with it because I know that now these prices are going to be cheaper. All of the companies I want to invest in are going to be at a cheaper and discounted price. And just long-term investing in general, putting money into the NASDAQ, putting money into the S&P, this is going to be the cheapest it will be in a very long time. And obviously, I still think we're going to head down. I still think we're going to be bearish for a little bit longer. But ultimately, yes, as concerning as it is for me as a young investor, I'm not excited for a crash because I don't want people to lose their jobs and I want our economy to be in a good place. But a little part of me is a little excited because I know that this is going to, in the long run, benefit me because now I can get in at an affordable price compared to before at all-time highs where prices are very tough to be able to get a good investment in, right? So that's why I just wanted to kind of touch on that first of all, because I know a lot of people might be a little scared right now. A lot of people are pretty fearful. And what makes this market drop so aggressively is because everybody is panic selling, right? You don't see that in the longs. You don't see people panic buying. That's why when we are in a long position, it typically does not move as fast as a short position, right? Because when the shorts are going, people are panicking. People don't want to see the market go down. So then they sell everything, which just causes basically a snowball effect, which is what we see now with the market going from all-time highs at the start of the year to in the first 3 months and what day is it today? 6 days. We have basically knocked out the entire gains from 2024. So pretty much something that we don't typically ever see. But again, I just wanted to kind of say that it's not going to be the end of the world. Well, hopefully it's not the end of the world. I can't see the future. But as a young investor, we got to find the opportunity in this. We can't be fearful. We can't be freaking out because the other cool thing is, as day traders, we can still look to make money off of this. We can still look to short the market. And that's what we're going to do, right? That's what I'm going to do. And that's what, when the opportunity is there, it's there. So I'm going to be looking to do that. So let me look at your questions real quick. Yeah, so the NQ is always a more volatile index, right? It's always been that way. It's always been more volatile than ES, than a lot of other indices that you can trade. But this is the most volatile that it's probably been in who knows how long, right? Probably maybe since COVID, right? This is probably the most volatile it's been since March of 2020, which makes it pretty difficult to be able to catch trades, right? Even on Friday, that was I think the third biggest drop in history of the stock market on Friday. I tried 2 trades, which were pretty good setups, and I tried to short the market. The first one, I got an entry, which I really liked the entry. Within seconds, within a few minutes, it pumped 600 ticks and stopped me out. I had like 100 tick stop loss, right? I was like, okay, maybe I'll give, and I was trading with one contract because I knew how volatile we were, right? I was like, okay, I'm going to give it one more shot. And even with another really solid entry, I still got stopped out with one contract. And from there, I was like, okay, I'm calling it a day. I'm not even touching this because even though a lot of people think, well, why don't you just short the market? Why don't you just close your eyes and jump in the shorts? On NQ, it's not that easy because of the volatility. So we still have to be looking for good situations, good levels to short. Basically looking to short from the very top. If you don't get in from the very top, it's almost impossible. So I kind of went back to look at one entry that I would have taken if I, was going to be more aggressive at market open. I'm going to have to find that exact entry. But it was around market open where we did have a really good fair value gap retracement right after market open. Let me go to the 1 minute time frame. And I was looking at the 1 minute time frame. And basically, if we go to market open right over here, we had really one opportunity, and that was pretty much it. And it was still pretty difficult. So it was a 1 minute IFEG entry right here. We had this 1 minute busy that got inverse, and then we tapped back into it. And I talked about taking it live on the stream, and I didn't end up taking it because I wanted to wait a little bit longer. But this one ended up being the best entry because it was basically at the very top of the move, right? So on these aggressive bearish days, you pretty much have to get in at the very top of the move, like a 1 minute IFEG or a liquidity sweep, with a CISD, things like that. And then you have to end up waiting all the way back for it to come back to take another good entry because, again, I think the original entry I tried to take was actually somewhere down here when I was looking for a breakout move, and we ended up pumping 600 ticks, right? So, again, it's very difficult to be able to trade this volatility. So I'm not super eager to try to jump into these crazy high volatility markets because I understand that at some point it's going to die down a lot, right? It's not going to be this volatile forever. So if I can still focus on taking good trades right now, looking for A-plus setups, and keeping my risk at a minimum. That way, even if I do take losses in the volatility, I'm still preserving my capital for when the markets do kind of calm down. That way, I can then look for big gains during those times, right? And if I'm able to catch a trade at a really good time, at the very top of the move, before the dump, then awesome, I'll catch a huge move like last Friday. 2 Fridays ago, we ended up catching a huge move, making about 5K and walking away because we got in at the top of the move instead of at the bottom of the move, right? So that's kind of what a good focus should be. Going into a week like this is trying to get at the top of the move rather than waiting for the breakout and then trying to get in, because these retracement moves are going to be huge. So we want to be trying to time it correctly. Can you explain NQ versus NQM? Yeah, so basically the NQ1 chart, the one that I have pulled up right now, this is giving us NQ data since the beginning of NQ. If you look all the way back, all the way here, this goes all the way back to 1999, right? The beginning of the electronic trading. So that gives us that data all the way back till then. If I were to pull up NQM right now, like this, right, it's not going to give us that data because these are only the June contracts that are pulled up. So we're only going to have data here on NQM from a few months ago when people started trading these contracts. These contracts have only been traded for 1 to 2 months at most, barely even that. So again, if you look at the daily time frame, notice how all of this data is just gone. So we have to pretty much look at the all-time chart compared to the current chart, but this is still going to give us it's still going to give us our levels, right? So we still want to look at this. So in Q1 basically is going to be the chart that I'm looking at from now on until we go back, until we pump again, end up recovering where we have our data. Then that's when I'll start looking at the other charts again. Are we allowed to trade in these conditions minus 5% with prop firms? It depends on the prop firm. The only one I know of that has restrictions against it is Top Step. Past that 5%, you'd have to look at the actual firm that you trade to be able to see that. I don't know all the different firms' rules on that. The actual NASDAQ, right, is 7%. So no matter what account you're trading, if the market hits minus 7%, it will halt for about 15 minutes, and then it will start again. And then if it hits another 7% down, it'll halt again for 15 minutes, and then it'll start again. And let's say it hit, I think it's 20%. If it were to hit 20% loss in one session, the whole market would shut down and nobody would be able to trade. So even if it does hit that 7%, you're still able to trade after that 15-minute halt. But again, the volatility is insane, and a lot of prop firms will have a rule against it. So I would just look through the fine print rules of whatever firm you're trading with so that you can get that understanding and be knowledgeable on that before you're trading. Because, yeah, I mean, if we look right now, NQM, it's down 5% already, which is just absolutely absurd. The market hasn't even been open for more than 45 minutes. It's been 31 minutes since the market opened, and we're already down 5%. So, yeah, I would just look into those rules. I don't know exactly for every prop firm, so I don't want to speak incorrectly on that for you. But let's just kind of now talk about these charts, right? How do we even go about charting this? It's very difficult to even go about charting a chart that looks like this. When we've seen this big of a dump in the past 8 weeks, it's, what levels do you even chart, right? So what we have to look at is our past history. We got to look to the left of our charts. And some levels I was looking at before the market opened was this swing low and this swing low. We gapped down below those levels. So now those levels are taken out because those are sell-side liquidity external levels. So now we have to go even further on the charts, and I'm on the weekly time frame, by the way, to our next sell-side level. So if we look all the way over here, this is going to be our next sell-side level at 16,334.25. What's crazy is I remember 2 Fridays ago, I was talking with someone in the chat, and they were basically saying, hey, do you think we could hit 19,000 next week? And I said, yeah, I think we could definitely hit 19,000. Little did I know we were going to hit 16,000 in 1 week. So we basically went from 2 weeks ago being at 20,000 to now being down to 16,600. So again, just things that are absolutely insane that we've haven't seen in a very long time. So anyways, the next level I'm going to chart out is 16,334.25 because I would still expect liquidity to be here underneath our swing lows, and you can call this support resistance, supply and demand, right? What do we have right here? We have a demand zone, we have an order block at this weekly down close candle. So where are retail or where are institutional investors well, I can't speak. Institutional investors going to put their stops or their orders. It's probably going to be just underneath that level or just right around this level. So this is a very key level right here, right? We also have a weekly bullish fair value gap, but we got to keep going down and looking for our next sell side. On the weekly, we don't really have another swing low. We have a wick right here, so we could chart out this wick on the weekly at 15.72125. And then, I mean, if we keep just going down, we're going to find a lot of sell side. We can go all the way down to here to 14,140. And before, I thought that was absolutely insane, but now I'm like, well, there's a possibility we hit 14,000 in the next few weeks. So, again, we want to have all those higher time frame levels charted out because we still need to have sell side targets. But ultimately, the best way to be able to trade this kind of market is by looking for liquidity that is generated during that specific session. So if we go back to, let's say, Friday, the way we want to trade this is not necessarily taking this first move down right here before market, but notice how we generated liquidity there. Okay, so now we have a swing low, and then we get a pullback going into market open, and we trade into a 15-minute bearish for value gap up here. Boom, right there. Notice how we trade into that 15-minute. So now we have a delivery from a 15-minute fair value gap. We have generated sell side liquidity down here, so we don't want to necessarily get a part of this move. We want to make sure that NQ generates session liquidity, because now we know that if we're just going to keep dropping, we're going to have to be reliant on these weekly levels that aren't necessarily going to give us the best entry opportunities. But if we can wait intraday and look for a pre-market level to generate like this one, now we have a very obvious sell side target that we can wait for this pullback move pre-market, and then the market opens, and then we're shorting back down to that sell side level, right? Does that make sense to you guys? Because it's much easier to be able to trade structure like this in this type of market compared to just trying to take the trade down to our weekly sell side lows that we have charted out. If we can wait for actual structure to be created in the session, that's going to give us a completely better structure for a trade, a completely better plan for our trade in the future, right? So instead of trying to chase the pre-market move here, I mean, obviously there's probably opportunity that you could take on that move, but just wait for that swing low to be generated, and then boom, wait for that pullback. Or right here, notice how we created another swing low, boom. So now we have more internal liquidity that's generated during the session, and then we get a big pullback here, and then that's when we're looking for more opportunities, right? We look for this pullback. Okay, we traded back into a 5-minute fair value gap right here. Perfect. So now we have this 5-minute retracement. Boom. So that's going to be a 5-minute SIBI. And then we see our reaction off of that level. We create another 5-minute SIBI. So now that we know we've gotten a reaction off of one 5-minute fair value gap, we have this liquidity that we generated from this session right here at that swing low that we know we're going back for because the market's absolutely dumping. We're not expecting longs. So now we're just using this structure to base our trade off of. So boom, we wait for this 5-minute fair value gap right here now that we have that conviction. And we keep our stop above the wick of the fair value gap, or, you know, we might have to go down to a 1-minute time frame to get a more secure entry. But keeping your stop above, and then you're just targeting that next sell side level, right? So this is kind of the best way, in my opinion, to trade this type of price action. Same thing right here. Okay, we form an internal low right here at this swing low. All right, perfect. So now we have our sell side target. We're waiting for this pullback. Okay, perfect. We trade back into another 5-minute fair value gap right here. Boom. And we look for the shorts from this 5-minute fair value gap to come back to that internal low. And then another example. Again, we just see example after example. We look for this swing low. So now we have another internal low generated. Boom, right there. We retrace back into this 5-minute fair value gap up top. Boom. And now we're waiting for a very strong reaction off of it before we get into the shorts. We get a strong reaction, and now we're looking to short back to that internal low again, right? So that's that kind of pattern that we want to look for on super volatile days like that, on super aggressive bearish days, because we know we're not going to reverse to the upside, right? Because look, we never got to close above this high up here, so we never displaced that high. You go over here, we never got displacement above these highs. You go over here, there's no displacement, right? So there's no reversal pattern. There's no break of structure. There's no market structure shift. We're keeping a downtrend here, making lower highs, lower lows. So every time we get that retracement, you're basically just waiting for a strong reaction off of our 5-minute fair value gap. And I know that sounds kind of simplified, and it is a little bit simplified, but that's kind of the idea we want to be looking for compared to waiting for us to start breaking and then jumping in the shorts down here once we get another break of structure because again, that's when we get stopped out. When we try to jump in down here, that's not the move. We want to wait for a swing low to generate. We want to wait for that pullback, and then we want to wait to catch the move from the very top down to the bottom, right? So in these kind of conditions, that's what we have to look for. In normal market conditions that are not like what we're seeing the past few weeks, then yeah, we could look for more of those breakout moves that when we have obvious sell-side liquidity. But on these kinds of moves, on a day like Friday, you just wait for that pullback. You wait for internal liquidity to be generated. You wait for that, price to go back to that fair value gap, and then boom, you look for your shorts back to that generated sell side, right? So kind of similar to here, we gapped down, we made that big fair value gap, and now we've created an internal low. So basically, we're just waiting for that pullback, and then we're waiting for an opportunity to catch the shorts back down. Right here is not the best example. We don't have the best order flow right now. It's kind of moving sideways, but it's that same exact idea, right? So that's the way I'm going to be looking at my trades this week. That's how I'm going to be determining the trades that I do take this week, based off of our structure from pre-market, based off of our structure from our New York Open, that whole kind of thing, right? Instead of just trying to jump in the shorts at open and just hoping that I catch the right move, when price could still retrace 500-600 to 1,000 ticks back up and then come back down, right? So let's kind of go back to our higher time frames. Let's go to the daily time frame. So again, what I typically do is chart out my previous day low and high, previous week low and high. There's no need to do that right now because we already gapped down below our previous week high or low, below our previous day low. We're not going back for a previous day high or a previous week high. I do not think so, at least. That's not what I would expect whatsoever. So that really doesn't matter to me anymore, right? So now I'm going to go down to the 4-hour time frame. Do I see any levels that price will actually retrace to? Right now, not really. Not on the 4-hour time frame. That's when I go to the hourly. Do I see any key levels that price might retrace to on the hourly? Not really. There's not really anything. The only place I could see price retracing to right now is the new week opening gap right here that we gapped, over 1,600 ticks. Besides that, there's not really any levels that I can base any trades off of right now. On our higher time frames, everything just looks super bearish. Doesn't look like we're going to retrace into any fair value gaps. There's not really any key levels here. If I go down to the 15-minute time frame, do I see anything that we could retrace into? Not really. The only thing I really see is that we have this 15-minute fair value gap right here. But overall, where am I going to take a trade in this? Because this gap technically goes all the way up to here. And that's a, 2,000 plus tick fair value gap right there. So what are you going to do? Are you going to get an entry at the bottom? Probably not. 2,700 tick fair value gap, not going to be taking that trade. So overnight, it's going to be really difficult to catch any trades, especially when we get kind of sideways price action and then the market just starts to dump for 1,000 ticks and then we get sideways and there's going to be hard to find opportunities. And that's why I say wait for the structure to be generated, right? Wait for the swing lows. Wait for the inversions. Wait for that liquidity, right? Like this swing low right here. Now we have sell side. Now we know that there could be institutional orders sitting below that level. Okay, so now we're waiting for the pullback. We're waiting for good structure. We're waiting for some kind of liquidity sweep or trends, right? We're holding this bearish trend right now. We have a bearish fair value gap here. So this is when I would be looking for the shorts to start continuing, right? Under VWAP, 1 minute fair value gap, coming back down to the structure, coming down to sweep liquidity, and then I'm waiting for that next swing low to form, and then the longs are going to step in, and then I'm waiting to short that back down, right? So you have to be able to adapt your strategy to market conditions. And these are market conditions that most of you probably have never seen, that I have not really ever traded consistently, right? These kinds of conditions. But I know from my experience that I've seen crazy conditions before, and I know how to adapt my strategy to the conditions, whereas a lot of traders do not know how to adapt their strategy. They keep trying to trade the same exact thing in conditions where that's not working whatsoever. So you as a trader have to figure out, okay, if my strategy isn't working in these conditions, is there a different way I can trade the strategy to still catch trades? And if there's not, that means I should probably not be trading right now, right? So like this entire week, you have to look at it that exact way. You have to look at the market by basically saying, does my strategy make sense right now? Or am I just going to start chasing trades? Am I going to start getting FOMO? Am I going to get revenge? I'm going to start revenge trading. Am I going to overtrade in these conditions? If you answer yes to any of those, then you probably should not be trading this market whatsoever for the foreseeable future, right? And that's okay. You do not have to be trading every single day. But if you can go into the day saying, I've back tested the past few weeks and I can see what this type of price action looks like. I see what works out. I see what doesn't work. And I know I'm only going to take the trades that I've seen work. Then that's fine. Then you can start looking for your trades and, you can still trade this week. But again, this is the kind of market condition where traders will either be destroyed or they will, it's kind of a make or break moment, right? For a lot of traders, especially if you are new to trading, this is a pretty crazy time to get into it, but it's still a great time to get into it in my opinion, because this is going to basically show you these are going to be the toughest conditions in the market in, who knows for how long after this, right? We haven't seen this since 5 years. Before that, we hadn't seen it for, about 12 years. So again, we're living through history right now. And this is going to be the kind of market that makes or breaks you. So if you give into those voices, if you give into those bad habits, then you're going to want to quit trading and you're going to blame everything on the market instead of taking accountability for your own trading, right? You have to understand that these market conditions are brutal, that if you are not smart, if you feel like you can just trade every day and make money and you're invincible, you're going to be shown real quick that you're not. But if you go into these markets really smart, understanding that I do not have to trade every single day. Maybe I'll only look for one trade the entire day. And if my setup does not show, then I do not get in the market, right? Because what happens is you try to jump into a trade at open, you get stopped out, and then you try to force another trade to make that loss back, you get stopped out, and it's just that cycle that you fall back into of those bad habits where before you know it, your account is blown, and then you're resetting it, and then you're blowing it, and it's just not it's not good. We don't want to do that, right? So understand that before you go into a week like this, that these conditions can happen very quickly before you can even figure out what's going on. If you are serious about becoming a full-time day trader, an independent trader, right, someone that wants to make this work, then you will take this very seriously, knowing that if you are making dumb decisions throughout the week, that you're going to get wrecked, right? So you have to focus on being smart if you are taking this seriously. If you don't take it seriously, you're just going to throw away your money and it's not going to be fun, and you're probably going to just say day trading doesn't work, this is stupid, and that's, to each their own. That's fine, whatever you want to believe. From my history, from what I have experienced in the markets, I know that this kind of price action is not normal, but this does not define you as a trader. If I don't perform great in weeks like this, I understand that it's okay, because most traders across the world right now are not going to be performing at their best with these kinds of conditions, all right? Just understand you're not alone in that. Even though last week I did end the week green, right? It wasn't a crazy profitable week for me because of the conditions, but I was still able to handle my emotions and still able to handle my capital in the correct way, because I know that if I'm not smart about it, then I could lose everything really quick, right? So again, that's kind of just my advice going into this week. That's the way I would look at this market. There's not a ton of key levels for us to be charting out right now besides those external sell-side levels I showed you at those weekly swing lows. We're really going to have to see how the market moves overnight. We could see a 7% hit before market open, right? We might see a halt. We could see this market dump. Some people are saying it could be a Black Monday, which is basically where the market crashes. Seeing the way this is opened, I wouldn't be surprised if that happened. So keep that in mind as well. But again, I just want to remind you guys, don't live in fear right now. I know that times right now might be tough. It's really easy to turn on the news and completely freak out because that's the way it looks, right? Everybody is fear-mongering. It doesn't look good. The market's down. But as a person that is getting into trading or that's getting into their investing, I know from my experience that this is probably the best possible thing to happen for a lot of people that are in our expertise or in our area or our field, because we have an opportunity unlike ever before, at least from the past 5 to 20 years. So you got to look at it in that kind of lens, and I know it's hard to do, and I still have a ton of empathy for people that might be affected by this, but at the same time, we have to be able to take advantage of opportunities like this, and that's what I'm going to be doing. And I'm also going to be playing it smart, right? I'm not going to be jumping into dumb trades because I see the market dumping. I'm still going to be playing it so conservative, guys. I'm going to be probably trading one contract in the morning, even if I do take a trade. And again, I might even have to scale down to micros to be able to trade this, right? That just might be the reality of these conditions for the next month or so. So again, whatever adjustments you need to make to your plan, I would figure those out tonight or tomorrow or throughout the week. And if you feel like you haven't made the right adjustments, then it might be smart for you to stay out of the market and, until you do make those adjustments, until you understand, okay, maybe I'll only be trading 1 to 2 micros now, or maybe I'm only going to trade 5 to 6 micros, right? But just come up with that plan based on this volatility so that if I need to have a 200 tick stop loss, that means I can only trade 1 to 2 micros, right? Or whatever that looks like. You have to make that plan before the market opens, before you decide to trade, because if you don't, very quickly this market will catch up to you and it will make you wish that you did make that plan before going into it, right? So that is my best advice for you guys going into this week. Again, I'm expecting a major dump. I'm expecting this market to continue selling off. I mean, we're 5% down already in the first hour of the market being open, and this U.S. stock market isn't even open yet, right? So, again, my bias is bearish, as I'm sure most people's is, and we're going to just be playing it smart. We're going to be looking to only take solid entries, and again, I'm going to be adjusting my plan based off these market conditions. I know, right? 200 tick stop sounds absolutely insane. From, about 6 months ago, I was trading with 50 to 60 tick stops, and now 100 tick stop barely even does the job. So that's what I mean. Like, you gotta be scaling down if you're gonna be trading this. 10 micros plus or minus and scaling in based on that. Yeah, man. Again, as long as you have that plan based on your account size, you're playing it smart, then that's what's really important. There you go. There you go, Travis. Yeah, man. That's smart, dude. Very smart. Right? So what I would do tonight or tomorrow morning if I were you guys is figure out, okay, what account am I trading? What size account am I trading? How much leverage do I have? Is this a prop firm account? Is this a funded? Is it an eval? Is it a live funded cash account on a brokerage? Basically, how much leverage do I have? How many ticks is it going to take for me consecutively to lose to hit my drawdown, right? And then you can divide that number by what our market conditions are. Do I need to have a 150 tick stop to feel comfortable in a trade, right? Am I targeting 300 plus ticks for a TP? Well, if that's the case, then I need to do the math. Okay, so if I have to have a 150 tick stop, that means I can only maybe take one trade on the day, or, and trade 5 micros, or maybe I can take 2 trades on the day and trade 2 to 3 micros, and I'm looking to take my profit at 300 ticks or whatever that looks like, right? So just do all that math tonight or before the market opens tomorrow, before you trade. That way you are fully prepared before the market opens, before the bell rings, so that you are not getting destroyed by NQ or by ES or whatever you're trading, but you have a leg up on the other people. You have a plan, right? Anybody without a plan is a fool. You have to go into this market with a plan. Okay, so do you guys have questions or comments for me before I end the session? And I just really wanted to cover all this because I know right now might be very tough times for a lot of people, especially traders that are newer to this or have not seen something like this before. Again, we don't need to freak out. There's going to be opportunity for us in these kinds of markets. But yeah, that's kind of just what I wanted to go over today. Of course, man. It's my pleasure. But yeah, if you guys have any questions or comments for me, please let me know now. Do you guys see what I was talking about, though, on these shorts? Do you see exactly that concept I talked about? Notice how we pulled back into that fair value gap and we kept that lower high. And now we're selling off from that 1 minute fair value gap and we're coming back down to the internal lows that we generated, right? That's the exact concept I talked about. Playing out right in front of our eyes. All right, you wait for internal liquidity, like this swing low, like this swing low, like this swing low. You're waiting for us to come back and retest, make another lower high, test a fair value gap at the top, get in from the top, and then you're looking to target sell side. So, I mean, let's just say, for example, you did look to take a trade like this. You got your entry, you kept your stop above, and look at that. I mean, this is the difficult part because to keep your stop above this high, that's 240 ticks, right? Which is not easy to do. But if you did hold, if you could hold all the way down to this low, if it does end up hitting, that's still over a 1 to 2, right? That's like a 2.6 RR. So it's still doable if you can handle the risk, right? Now, you can have a smaller stop loss. if you wanted to, but that's technically where the best placement for your stop loss would be. If you wanted to keep it a little bit tighter, you could always keep it at the very top of the stop of the fair value gap there, keep it under 100 ticks, and then you could just target these lows for a TP, and that's more of a 1 to 4 RR, right? But that's just the kind of trading that we're going to have to be looking at in these conditions, and as you can see, it's playing out kind of right in front of us, and that's what I'll be looking to trade tomorrow. Hey, there you go. You caught that, NASDAQ? Very nice. Very nice. Yeah, guys, again, that's all I got for you tonight. I wish you all the best in this week of trading in the future. Again, if you're not in VIP, I wish you the best. If you are in VIP, I will see you in the morning for pre-market analysis. I'll be on at 6:15 Pacific Standard Time, per usual. And we'll be kind of talking about what happened the night before, going over our key levels, doing our morning checklist before we look to take any trades. And yeah, again, pay attention to our news as well, Forex Factory or the news channel for my VIP members that JB sends every single day. He updates us on all the news and how important it is. But yeah, just be looking through Forex Factory if you are not VIP. Check out when our high impact news is, the red folder news. Tomorrow we don't really have any key news. We just have a FOMC member speaking at 10:30. Besides that, nothing really major. But even without high impact news tomorrow, I'm still expecting some craziness in the market. I don't think it's going to matter. I think that institutions and retail traders are going to have enough power to really control and dump this market again. So that's what I'll be expecting. And that's what I'll be looking for, to get in from the top of the move and not wait for the move to happen and then jump in at the bottom, right? But, all right, guys, appreciate you so much for being here. Hope you got some good value from this session. And, yeah, I'll see VIP in the morning. God bless you guys. God bless. Have a great rest of your Sunday, and good luck this week. Of course, everybody. Peace out, my friends. Peace out.